Okay, so I think it's 1 o'clock, and we have people joining us already. So let's start. Good afternoon, ladies. How are you today? Let me see by your comments in the chat room how you're doing today. How do you feel? It's a final masterclass. It's not the last session, but it's the final masterclass. Good. Yeah, feels good. Oh, you ladies are excited. You can't wait to end, right? Miracle says she doesn't want it to end. Every good thing must come to an end. All right, so today we're having our final masterclass, and it's taken by none other than Olubumi Kuteyi. We've sent you her profile, yeah? She is the she's a partner for tax and audit services, right? At Pedapo Financial Services Limited. And ladies, guess what? She just became a fellow of ICANN, yay! So let's show her some love. She's not a fellow, so please, when you're calling her name, you have to say Olubumi Kuteyi FCA. It's not.
Thank you so much, ladies. Thank you.
Congratulations, Bumi. It's exciting, you know. It's not easy to be a fellow. Not many accountants in Nigeria have achieved that feat, and it's indeed
quite true.
An enviable feat, you know, that you have.
Thank you so much.
That you have achieved. Well done, congratulations. So today she'll be teaching us about tax. If you're like me, I don't like tax people. I don't like anything that has to do with tax. But today she's going to demystify tax, you know, break it down in a way we can all understand and help us see why and how we need to go about managing our taxes, especially as it relates to our business. So ladies, let's welcome Bumi. Bumi, over to you. Thank you for honoring our invite.
Thank you so much. Thank you, Mrs. Kehinde Peters. I want to say that I really appreciate the privilege to be part of this. For me, usually when I hear things about women, you know, a forum for women to help women advance, all right, it's usually something I take pleasure in. So I really love the fact that this is, you know, simply for women. And of course, I would also like to commend the good job that you're doing.
Thank you.
Okay, so putting together women from various countries, just all in the name of helping them thrive in business and be better. So I think it's something that is worth commendation. Well done.
Thank you so much.
Yeah, well done, ma. So I also like to welcome everybody. You know, usually when people hear about tax consultants, there was a time I actually was in a meeting with someone and the person went, I don't like tax people because they're the ones who collect the tax. So I had to start pleading that, see, I am not a tax collector. I am actually a tax consultant. So I help you not to overpay taxes or on, you know, pay something that you're not supposed to pay. So the person now had to come down, okay, so you're on my side. I said, actually, I am on your side. Okay, so I'm actually on the same side with you ladies. I would like to welcome you to this training masterclass today. I want to believe everybody here are ladies, and if not, let me welcome the probably few gentlemen.
No, they're all ladies.
They're all ladies, okay. Okay, you're welcome, ladies. Okay, recently, not too long ago, the World Bank came up with its ranking for ease of doing business all over the world. So actually it evaluates about 190 economies on an annual basis. And then reviewing that report, I saw that Nigeria is on, I think, 131, okay, ranking 131 out of 90, out of 190, I'm sorry. Okay, Ghana is somewhere around 118 out of 190. Cameroon is 167 out of 190. And then it dawned on me how difficult it is to be an entrepreneur in this part of the world, all right? So especially when you have women taking on those feet and doing everything they can to ensure that their businesses thrive and succeed. I think it's something that what to be commended. So I want to just appreciate every lady on this platform. I tell you, you are doing a great job. So just give yourself some pat on the back that I am trying. All right. So that is that. So to the business of today, taxation and your business. So I've been invited to talk on this and also to let you know everything that you possibly need to know about taxation. But before I proceed, I would like to crave your indulgence. I may not be able to do that within the 40 minutes that I have for this presentation. Of course, we're going to have a question and answer session as well after the presentation. But then, as much as possible, I'm going to try to take you through most of the things that you need to know, all right, to help your young business thrive. I'm sorry, now I'm trying to move my slide to the next page. But before I do that, let me just, yes, it's actually sort of hanging.
Okay.
You can see it now, right?
Yes, I can. Just put it on presentation mode and I'm sure.
Okay. Okay, so taxation. So basically some introduction to put a perspective to taxation. So you are probably like me, all right? So the fact that I'm a tax consultant doesn't make me feel better about taxation, not necessarily, all right? It's not easy for me on a monthly basis when my salary is coming and I'm seeing that a large chunk has been taken out. For what purpose? For tax purpose. It's not easy. So just agree with me that we're on the same page as far as taxation is concerned. So I would rather not pay if it were possible. So to the outline, why do we have to pay taxes, the legal framework, the peculiarity of the Nigerian environment, the types of taxes, what you need to do, what is your obligation in all of this, okay? From registration to assessment of taxes, filing your returns, obtaining tax clearance, and then we talk briefly on the Finance Act of 2019 that was recently introduced by the Nigeria government. Okay, so let me also crave the indulgence of the beautiful ladies on this platform that I'm going to sort of be majoring on the Nigerian taxation environment. So please, if you are not living in Nigeria, if you're not resident in Nigeria, you don't have a business at the moment in Nigeria, just follow me as I progress in this, because sometime in the future, you never can tell, your business may expand and enter Nigeria. So here is me trying to prepare everyone who has a business or who may eventually have a business in this part of the world, on what is obtainable and what your obligation should be as far as taxation is concerned in Nigeria. So what is taxation? Simply put, it is a compulsory levy. Okay, it's a compulsory levy imposed on people by the government. Usually what happens is that you may not necessarily be a citizen of a particular jurisdiction, but then the government of that environment imposes a tax, okay, probably on its residents. And then if you are a citizen of another country and you are coming to transact business within that territory, or you have a company within that territory, that means that the rules and the legislation of that government as far as taxation is concerned becomes binding on you. Okay, so here this is just a short analysis of a state. Most times I've heard people ask questions that why do I have to pay tax? Why should I even be thinking about it? What is government doing for me? All right, and all of those kind of questions. But I would just like you to take your mind away from there and bring it here. So this is the point. Every country is a state. Okay, every country is a state. It is independent. It has power and control. It is sovereign. Okay, and it has the power and control over its people or over its territory. We understand now. So every country is powerful. So no matter how poor or how bad, okay, no matter how corrupt that state may be, and you are looking at, okay, no matter how bad, every state is sovereign and it has the right and power to, legislate, set up rules, laws that will be binding on every citizen or resident of that country or anybody who chooses to come in there to maybe earn money, make profit, and what have you, as far as taxation is concerned. So that's basically, the basis of why taxation is compulsory. Ordinarily, I should be able to opt out to say, no, I don't want to do, or I want to do. But that is not the case. Taxation is compulsory. As you have chosen to be within a particular jurisdiction, you have no choice than to comply. Those rules are binding on you. So I actually brought in some of these countries here because in my mind, this was my attempt to represent all the countries that will probably be on this presentation on my slide. I hope I was able to do that well. Okay, thank you. So why do I need to comply? I mentioned earlier that taxation is a compulsory levy. So it's an involuntary, the way it is, you don't have a part in that decision, all right? So the government says it is 50% of your profit or of your income, so be it. You don't have a part to play. So as involuntary as it may be, or it may seem, I give you an example of what happens to me on a monthly basis when I say that, okay, my salary is coming in without what they assigned with me, what is on my contract is different. It's probably a 10 million per annum, and what I'm seeing on a monthly basis is not 10 million divided by 12. Okay, so that means taxation has taken a chunk of my, but as involuntary as it may seem for me, I have no choice, even if it's grudgingly, I grudgingly comply. It doesn't have to be willingly, okay? So that's just my point as far as that is concerned. The reason why you need to comply, number one, because every state is sovereign, like I've mentioned, they can make laws and legislations, rules, and say, okay, this is the way this has to go. It's 50% of your income, 100%, definitely not 100%, but certainly a percentage. It is a law, and it is binding on every citizen or resident of a particular jurisdiction. So anything that you do outside that law means evasion. So evasion can be you paying taxes that is less than what you ought to have paid, okay? Or you not paying any taxes at all. So that is evasion. And as far as the law is concerned, tax evasion is illegal, all right? So you don't want to be caught on the wrong side of the law. Another thing is that it's a revenue generation tool for the government. Government wants to do A, government wants to do B. Where does the revenue come from? Taxation is part of the sources of revenue generation for every country. So you see the reason why governments will insist and say, no, every person must pay. Okay, and also there are times you need to go maybe into to bid for a contract and all of that. You need to perfect titles to certain documents and all of that. And they are asking for your tax clearance certificate. If you have not paid taxes, there is definitely no way that you'll be able to provide or obtain a tax clearance certificate. So it's also important for that purpose, and also even for visa processing at times. I know that happens. Then it is a requirement for you to operate a bank account. Recently, the Finance Act that came into operation on the 1st of February 2020. Okay, so let me just explain what the Finance Act is. So Finance Act is just a way of the Nigerian government updating the tax provisions that we have operating before then. So we have companies income tax, we have personal income tax, value-added tax. So virtually everything was updated. So instead of updating the laws individually, the Finance Act came as a whole tool to update all the tax provisions operating in the Nigerian tax environment. Okay, so the Finance Act recently introduced this. I know this has been operational sometime before 1st of February, but what the Finance Act now further confirms is that for you as a business owner, for you to open an account with a bank, so except you just want to be making your money and putting it under your pillow or under your bed or mattress, for you to operate a business account, you have to obtain or provide the banker with a tax identification number. Okay, so generally it's referred to as TIN. So if you don't register with the tax authority, there is no way you can get a tax identification number. So that means that ultimately you probably have to be putting your money under your bed or under your pillow, under your locker and all of that, which of course is not sustainable. So for you to operate a business account, you will need to obtain a tax identification number, which means that you have to register with the tax authority. So there is also something in this part of the world though. In Nigeria, the Nigerian government has a mirror of your bank account. So let me explain what that is. At the back end, the moment you register for tax purpose and you use that TIN, which is the tax identification number, to open an account with the bank, the inflows and outflows from that account can be viewed by the tax authority at the other end. Usually they don't view it regularly, but if the need calls for it, they would pull out every transaction that happened on that your account. So you can imagine if I'm earning money and I'm not paying taxes on the pretense that, oh, my money is not plenty, you know, I don't have to take taxes from this small, and the law says pay taxes. And then one day you've been hiding and hiding and hiding, and the government just wakes up and says, for the past 10 years or 20 years, you've not been paying. And you're trying to deny, and they bring out the flow, even the income that you have forgotten and spent. Okay, so you see the flow that, oh, this money came in, this one went out. They have that evidence. So you can see it won't do us so much good by trying to hide from government. Then penalty and interest. At the moment, for every tax default in Nigeria, a tax defaulter will pay a minimum of 31% on top of that amount that you have defaulted. So you can imagine you ought to have paid 100,000 maybe in 2019, and you escaped. You chose not to pay that money. So like I was saying, so maybe 10 years down the line, government now comes back to say, okay, we have your records. Why didn't you pay ABC? So the 100,000 you ought to have paid in 2019, 31% of that amount, okay, will be paid as penalty. So that's about 131,000. So that is on the flat rate. So that's the minimum. Recently, most of the state governments have started something, and they are saying, because actually the provision of the tax law says that they should add up that penalty to the first year, 2019, bring the 131 to 2020, add another 31% to it, and start compounding. So that's the provision of the law as far as penalty is concerned. So until you pay, they are supposed to be accumulating the penalty and interest. And at the end of the day, you're wondering, why should you suffer? Why should a business suffer, you know, that much for nothing? So you see that it's, of course, in your best interest to sort out tax obligations as soon as they fall due, instead of trying to defer them and cause more problems for the business. Then seal up of business premises or lien on business accounts. Sometime in 2018, the Federal Inland Revenue Service came up with something called FIRS tax substitution. Okay, so what it means is that if the government, the Federal Inland Revenue Services feel that this entity or business has not been paying taxes, they just advise your bankers. You know, I said they have a mirror of your bank account. They will advise the bank and tell them, we are placing a lien on this account. No inflow, no outflow, henceforth. No transaction must go on in this until this person comes to settle his tax liability. There was a lot of uproar when FIRS did that thing. You know, in 2018, a lot of businesses, just somebody has issued check probably for salary, and you know, you get to the bank and you discover that there is a lien on the account, no operation can until the taxes are paid. So that's another tool that government can, they can actually compel you or run down that business. So that's another thing, and of course, you don't want that kind of a thing to happen. And of course, the reputational issues that come from that. So you can imagine if they seal up your business premises, they usually have this sticker that they will just paste at your door. They will make it very conspicuous, and you dare not remove it. You dare not remove it, because it's also, there is a fine for you taking out those kind of stickers. So they will paste it. At times they will lock it up. At times they will come to carry the MD. So there's been all sorts of embarrassing situation because companies are either trying to evade tax and all of that. So there are 1,001 reasons. I just thought, okay, let me just bring this up to help us see the fact that it's easier to pay than not to pay. Because when you decide not to pay, of course, a lot of complications that will then come into play that will be more than what we were running away from. So essentially, it's important that we understand that paying taxes at the end of the day would help you save yourself a lot of headache. It will help you save yourself a lot of headache. So I just put this quote here, and the quote says that a tax is a fine for doing something right. Okay, so a tax is a fine for doing something right. A fine is a tax for doing something wrong. So whether you choose to do right or wrong, at the end of the day, you still end up paying the tax. So you can imagine, it's sort of inevitable. If you don't pay it as tax, you pay it as fine. So it's safer and more, what would I say, and more dignifying to pay it as tax instead of waiting until all the harassment and embarrassment before you choose to pay it as a fine. Okay, so at the moment, these are the current tax provisions that guide the Nigeria tax practice. So we have the Companies Income Tax Act. These laws are usually updated, okay, as time progress. Companies Income Tax Act, the Value Added Tax Act, Personal Income Tax Act, Capital Gains Tax Act, Custom and Excise Tariff Consolidation Act, Stamp Duties Act, Petroleum Profit Tax Act. So basically, everything we are going to be looking at will be stemming from one or some of those provisions. Okay, so I just wanted to remind us of the peculiarity of the Nigerian case. You know, a few years back, what used to happen in this part of the world, and even partly still happening till now. Okay, in Nigeria, we are used to oil money. As some of my brothers will call it oil money. So we are used to it. So the inflow is there. Government has enough funds to fund, enough resources to fund the budget. Nobody is thinking about looking inward. Nobody was thinking about all of that. Until sometime in 2014, when there was a sharp crash in the price of crude oil. And then Nigerian government started thinking that, okay, now it is staring us in the face that what we've been doing is no longer sustainable. So we need to start re-strategizing and looking inwards to see how do we survive at the end of the day. We can all see what is happening to the price of crude now. All the price wars, the crash in demand, and all of that, the price of crude was coming to minus. Things that we had budgeted, the Nigerian budget for 2020 was based on a benchmark price of $57 per barrel. And now we've had to adjust our budget to now reflect a benchmark price of $30. So you can imagine all of that if there was no other source of revenue generation. Okay, largely our budgets have been deficit budgets. After all the budgeting, the price of crude, the inflows from that and all of the IGRs, we still borrow internally or externally to shock the budget and fund it. So in a case where we don't even have revenue from oil, so what do we do? So in 2014, the government started thinking in that direction, and arrangements were made to now focus more on generating revenue internally than depending on the price of crude or the sales and revenue from selling crude oil. Okay, so when the government started thinking of that, of course, the options. Remember when the border was closed, importation of rice was banned, okay, so that people can go through the normal channel, and that helped to increase our import duty revenue. So customs got more money in import because, so government started thinking was that, okay, what can we do to ensure that the internally generated revenue are increasing? Government looked towards agriculture. Most of the measures and reforms that government is trying to put in place now is to also encourage agriculture and make sure that a lot of people in Nigeria are thinking of production internally. We import virtually everything. And see now we are producing rice and all of that. And those are having impacts on the economy. The 2019 GDP analysis for Nigeria, we call it that agriculture at about 23% of the GDP. So you can imagine, these are things that we've neglected in time past. Then of course, tax revenue, the cash cow. Okay, so that's more like readily available source. So when we drag the corporates from here, the individuals from here, revenue must come in. So tax largely is responsible for funding government operations, at least for some years now. Then see what is happening. Since then, there has been a lot of aggression in the tax space. So what government is doing, because before then, a lot of informal businesses were out of the tax net. So you can see the woman who is selling clothes in Balogun making hundreds of thousands per sale, and she'll probably even make millions in a day. So those kind of huge amounts, they escape the tax net. Why? Because that person didn't register as a corporate entity or registered as an individual, or she just put her money in a personal bank account. And now government is putting all sorts of reforms in place to ensure that as much as possible, everyone who is operating business in Nigeria or who is resident in Nigeria, earning money from Nigeria, you pay the taxes that is applicable. And you can see with all of these COVID-19 stories, the expenditure for government, we are seeing all the palliatives, all these things, they are costing a lot. Okay, all these things cost a lot. And then the budget is still there. There is no how government is going to fund it. I'm very certain that if not for the fact that most businesses are closed down at the moment, you would have started seeing all sorts of, oh yeah, place a lien on their account, seal up businesses. All of those things would have started happening because Revenue Tax Authority needs money. I can tell even from the information that we get internally, they need money. So you can imagine if I am now that person who wants to leave myself at the mercy of the tax authority, okay? Because I've chosen that, let me just do what I want to do now. Let me hide the money now. And I'm paying in future with huge penalties and interest. So I'm sure no business wants to, do that. So basically, in Nigeria, there are 3 regulatory authorities as far as taxation is concerned. So the Federal Tax Authority, which is the Federal Inland Revenue Service. So what FIRS does is that it is the one that administers taxation of corporate entities. So if you are registered as a company, the Federal Inland Revenue Service is the revenue authority that administers taxation for your business. So if your business is a company, it's under Federal Inland Revenue Service. Then any other business, as long as you charge VAT, is only the Federal Inland Revenue Service that administers VAT. So VAT and any tax payable by a corporate entity is administered by the Federal Inland Revenue Service. So we need to take note of that. Then State Tax Authority. State Tax Authority, they are responsible for administering taxes of individuals. So for instance, if your business is registered as a sole proprietor, as a business name, okay, so that's enterprise, business name or a partnership, in whatever form minus aside corporate entity. So if it's not a corporate entity, you will come under the State Tax Authority, which is usually the State Internal Revenue Service. And you will come under the purview of the SIRS of the state that you live. Because that's another mistake that people make. It's not the state where you do business, it is where you live. The reason is because each individual who is doing business using a business name is seen as the same, as one and as the same with the business. So your business as a business enterprise or partnership is not taxed in isolation or separate from you. So you are seen as the same as your business. All right. So the taxation of your business as a business enterprise, a business name, sole proprietorship, partnership is seen as the same as the owner of that business. So that's why it is based on where you live as an individual and not where the business is happening. So you may have a business in Lagos and you are living in Ogun. So the relevant tax authority for you is the one of Ogun because that is where you're resident. Then the local government authority, this is not necessarily a tax authority, but then they also are responsible for collection of certain taxes and levies. You see all the markets, all the shop levies, all the adverts, all these billboards, signboards, and all of that is the local government authority that is responsible for that. So if you see any request or certain taxes from any of these tax authorities, you shouldn't be scared. Okay, it's one of the things that they do. The only thing that you're required to do is to review and be sure that what they have asked you to pay is what you should be paying or what is due from you or your business. Okay, so straight, what should you know about taxes? I'm going to take us through the types of taxes, direct and indirect taxes. Okay, so direct tax is a tax that you pay on what belongs to you. So when I say what belongs to you, so I talked about my salary. I am paying tax on that salary. The salary was first mine, but something has been taken out of it. So for direct taxes, is the person who is suffering that tax, that is responsible for paying it. So if you're paying any tax on what belongs to you, that's a direct tax. So your company is making profit and you are paying a certain fraction and saying, okay, this belongs to the government. It is a direct tax. So they are taxing something that directly belongs to you. So for your profit as a company, for your income as a business, or your profit as a sole proprietorship or partnership, and what have you. So any of those things is directly taxed in your hands. Petroleum profit tax, the same thing. So any profit you make from petroleum business, your chargeable profit, so being subject to that is a form of direct taxation. And capital gains tax, you dispose of a chargeable item. For instance, I'm disposing of my car. Okay, whatever money I make from that disposal minus the cost of the car and the cost of disposal is liable to capital gains tax and 10%. So all this kind of gains, profit, income, and all those things that belong, they are more like things that belong to me, but they are being taxed in my hand. That is what direct taxes relate to. So you are being taxed, you the owner, you are being taxed. So that's direct taxes. Then we're still going to look at this a little more elaborately. Indirect taxes are taxes that are based on transactions that you involve in. Okay, so VAT, withholding tax, stamp duties, that happens because you are making a sale. So you are selling a car to me, or you are selling, what else can I use now? You're selling clothing to me, or you're rendering a service to me. So the government expects that you are the one who is rendering that service. Government wants you to charge the other party 5%, collect that 5% and come and remit it to me. So government is sending you an errand to act on their behalf as an agent for the purpose of collecting a particular tax. So those are the ones that are referred to as indirect taxes. They are not directly taxing the person who is bearing the burden of that tax. They are taxing that person through somebody else, just by virtue of the fact that the person has been involved in a particular transaction. So like I said about VAT, so you are making a sales, except if you are exempted or your business is exempted, or sorry, your product is exempted from VAT. The government has given you the responsibility. The moment you register with FIRS, you have that obligation to, so for instance, now you are selling something to someone, 100,000, that's your invoice value. You will now add 7.5% of 100,000. Okay, you add it to then you, at the end of the day, you bill that person the whole amount. That's your 100,000 plus the 7.5%. So what happens is that you collect the whole amount and take that 75,000 and remit it to the Federal Inland Revenue Service. So that means the government has used you to generate tax revenue. Then the other party that is buying from you, okay, so you have charged the person. The person is supposed to give you 100,075 or thereabout. So you who is selling has charged VAT. The person who is supposed to pay you the money also has obligation for withholding. Okay, so that person has obligation for withholding part of the money is supposed to pay you and also remit to government. We are going to look at the rates that are applicable for some of these things and the transactions that it applies to. Then stamp duty. Stamp duty is also on transaction. I know most of us will be aware of the 50 naira stamp duties that CBN has compelled banks to be charging when you either make a payment, a transfer, or you receive any amount that is above 10,000 naira. Okay, it's a charge because you have paid, or so it's because you have done something. So any kind of tax that is by virtue of the fact that you transacted, or you made a transaction at a particular time, is transaction tax, and it is indirect. Somebody else has been given the responsibility to take it from you and remit it to the government. Okay, so companies' income tax. I mentioned earlier that for companies, okay, if you're a company, so that means I need to rush through this because of my time. If you're a company, you're a corporate entity. I mentioned that government and the tax law, in the eyes of the law, you are seen as a separate entity from the company. So that means that your company will be taxed separate from you, the individual who is the owner. So that's for an entity that is registered as a limited liability company, a company of whatever nature or registration. As long as you are a company, you are seen as a separate entity from your business, or the business is seen as a separate entity from the owners. Okay, so your tax returns are different. So here I'm talking about the one that relates to the company as a whole. So you are saying Pedabo Associate Limited, that is a company, is seen as a different entity, and it should be taxed based on the rates that I have here. In the 2019 Finance Act, government, in a bid to encourage small businesses that are just coming up, okay, has said any business that is within an annual turnover of 25 million. So that means from 0 to 25 million, you won't be paying any company's income tax. Before now, company's income tax was 30%, regardless of who you are or what as long as there is profit. Your company's income tax is 30%, okay, of that profit. And this is another thing that I need to help us understand. A lot of times, so many of us shy away from taxation because we feel that even if I'm not making profit, I have to still pay. No, tax is payable on profit. So if you are making a loss, the provision of the law even helps you that, so if you've made a loss for 2019, there's a provision of the law that ensures that, okay, that loss that you've made in 2019, if you make profit in 2020, you won't first pay tax on that 2020 profit. You first recoup the loss that you made. I hope you understand that. You first recoup. So there is actually a mechanism in place for you to recoup losses of previous period, and it's indefinite. So you can imagine in a case where you decide not to keep your book of accounts, you yourself, you're not even aware whether or not you made profit or you made loss. And at the end of the day, you're actually shortchanging yourself without realizing that there is an opportunity for you to claim a relief of those losses that business has made in the future. So for any business that has a turnover of 25 million or less, the tax law now says you are paying taxes at 0%. So we are not disturbing you. But now here is the point. This provision is not automatic. Okay, so it doesn't mean that if my turnover is less than 25 million, I should just fold my hands. No. So the tax law is saying you must still prepare your financial statement, file your tax returns, and submit it to the tax authority before the end of 6 months after your accounting year end. So let me just cite a short example. If your financial year is up to December of every year, so that means that 6 months after December 2019 is June 2020. So the government expects that you will file your tax returns before the end of June 30th, 2020. So look at this incentive for small businesses. This 0%, you will not be able to take advantage if you don't file that returns before that due date of 6 months. So this will help us know that it's not automatic. So you can't claim it by virtue of the fact that you are below the 25 million threshold of annual turnover. If you don't file the return, you have to forfeit that benefit of paying tax at 0%. Okay. Then also, there shouldn't be withholding taxes from your income if you still fall within this category. So what government is trying to do is saying, okay, you have made this much income. Let's just support you and help you grow that business in the meantime. All right. Then for businesses that have annual turnover between 25 million and lower than 100 million. So within that range of 25 million and lower than 100 million, their taxes will be paid at 20% of their total profit. So this is another incentive for companies whose turnover fall within that range. What they used to pay before was 30%, regardless of who you are. all right, with the banks, all of you is 30%. But now this is a good incentive to encourage businesses within that, turnover threshold. So instead of paying 30, now you are paying 20. So that's for medium-sized companies. Then the large companies, as usual, you are still paying your 30%. So as long as your turnover is 100 million and above on an annual basis, you still pay your taxes at the rate of 30%. I expect I will be documenting our questions so that by the time I'm done running through the slides, we can take the questions.
Yes, they are just sending in the questions in the Q&A chat.
Okay. Am I supposed to take that now?
No, they are just sending it. So when you're done, we'll now take it. Yes.
Okay, so I mentioned what happens when a business is registered as a company. Okay, that is company's income tax, the 0, 20, and 30%. So if your business is registered as a business name, so that means you're an enterprise or maybe a partnership or sole proprietorship, whatever, something, and sons, whatever that may be, as long as you are not company. I mentioned that the business is seen as the same as its owners. So what would happen is that in your name, as though you are the business, whatever you have made as profit from that business, you do a calculation and you file your personal income tax returns. So usually the rate for personal income tax is within the range of 1% and 19.2%. 19.2 is the maximum. Okay, so that means if your profit in a year or your income in a year enters the range of 100 of millions, this is the worst case scenario. All right, and minimum tax is 1%. If you're filing your returns as a business enterprise. So that means that if you are paying nothing at all, at least you must pay this 1%. That is minimum. Okay. Then for petroleum profit tax, so usually included in this personal income tax, if you are a business and you have employees, the government also puts the responsibility to deduct tax from the salaries of your staff. Okay, there are certain calculations that would have been done to deduct tax from salaries of your tax and remit it to the government, because you are the one they will come back to meet if they don't see those taxes. So instead of going to meet those individuals who are your staff, they won't. They will come to you as the business. So at the end of the day, it's a business that suffered the tax that should have been deducted from the staff, plus the penalty and the interest. So on the long run, you'll be putting the business through a lot if you don't do what is needful by taking taxes from the salaries of the staff before making payment. Then on petroleum profit tax, this is payable on chargeable profit, usually 85% for petroleum. Usually this is the production, so this is upstream. So for them, is 85% of whatever chargeable profit that they make in a particular year. The moment you started disposing crude at a commercial rate. So before then, if you are still within your development stage, the rate is 65.75% of chargeable profit. Then capital gains tax, I've explained capital gains tax before in my earlier slide, is at 10%. So if I make a gain, I dispose of a car or I sell anything that is chargeable, I will first take out the cost of what I have sold. So the original cost that I purchased that car. So imagine if I bought a car in 2014 maybe, and I'm selling it in 2020. So whatever price I'm selling it in 2020, I'll first have to take out the cost of the car, the cost that I bought the car, and any sale or disposal charges or expenses that I incurred in disposing of that car. So it's whatever the balance is that this 10% will be charged on. Okay, so we are elaborating on the indirect taxes. So this value-added tax, you had mentioned the fact that the value-added tax was formerly at 5% until the Finance Act, which became effective on the first day of February 2020. So like I mentioned, except what you are selling is exempt from VAT. So the VAT Act has a schedule that shows all the products that are exempt from VAT. So except you are exempt, what is expected that each sale that you make, you're supposed to charge 5% in addition to that invoice value or your own selling price and remit that 7.5%. I hope I didn't mention 5%. It's 7.5%. So you remit that 7.5% to the Federal Inland Revenue Service. So I just have a few items here out of the ones that are exempt. So basic food items, and water. So basic food items are general, food, anything that has to do with food, grain, rice, bread, yam, pepper, vegetable. As long as what you are selling is food, the Finance Act has exempted, there is a proper clarification in the Finance Act now that has exempted all of those from VAT. So if you are selling food, you are very safe. Okay, if you are selling water of any nature, apart from if you are a restaurant or you are a caterer who is selling food and selling water, those kind of water, or I think there is flavored water and which other one now, sparkling water. You can imagine water is now being separated. I don't know if the work that the water does in your body, comes with the value of the water. So what government has done is to say, okay, those classes of water, they are liable to VAT. But if you are selling just bottled water and all of those, they are exempt from VAT. Medical and pharmaceutical products, if you go to the hospital, if you go to a pharmacy and they are charging you plus VAT, just tell them that I know the law. This thing is not liable to VAT, so don't pay VAT to them. Or if you play in these businesses, ensure that you don't charge VAT. Government doesn't expect you to charge VAT. Then baby products. Okay, there has been controversies around who is a baby. There are some men, there are some women who call their husband baby. All right, so regardless of the age. So before the Finance Act, there was no proper clarification. What the law just says, baby products. Everybody will say, okay, my husband is also a baby. So anything that I'm buying for is VAT exempt. But what the law now did with the Finance Act was to say babies below the age of 3. So from 0 to 3. So that's what is referred to as baby. So you don't have that luxury of extending it beyond 3 years. So from 0 to 3, anything, baby food, baby diaper, baby seats, car seats, everything that has to do with babies, they are now VAT exempt. So if you trade and play in that area, just know that you don't have that obligation. Then books and educational materials. So you have books for schooling, educational materials for any category of education, nursery, primary, tertiary, adult education, whatever there is. As long as there are books and educational materials, they are exempt from VAT. So recently, the Finance Act has included locally made sanitary towels. This was not part of it before. So for sanitary towels that are locally made, they are now VAT exempt. For tuition fees, so that's the school fees. So you are paying school fees, is any school charges you VAT. Just take it out that, okay, this is tuition fee. But then what the law has done now is to say, okay, it's just tuition fee. So if the school is charging you for school bus and they are putting VAT, or they are charging you for other things that is not tuition or books and educational material, it is liable to VAT. So it's just safe for anybody playing in this space. If you are a maybe a teacher or a proprietress, just put everything as tuition. Make them instead of splitting. Schools have a way of splitting now. They will now cut different lines. So it's better you merge them so that you can, take advantage of this. So all forms of export, they are not liable to VAT in Nigeria. Equipment and agricultural equipment for agricultural purpose and for gas utilization in Nigeria, they are not liable. Residential premises. So if you rent a premises that is for residential purpose, your landlord cannot charge you VAT, no matter who the landlord is. Even if it's a company, he cannot charge you VAT. So the law exempts that from, except in the case where a company is renting a property for you, that is liable to VAT. But if you are paying, for a residential premises, it's not liable to VAT. So there's also something like zero-rated items. So that means that the ones on top means that you shouldn't charge VAT at all. These ones below means that these items or this entity, if you are selling anything to them, charge VAT at 0%. Okay, so that one has a little complication. So if I explain it, you won't understand. So what it just means is that instead of not charging VAT at all, charge it at 0%. The advantage it gives you is that if you bought something that you are selling to this guy, because there's actually a mechanism for you to claim the VAT that you have suffered. So for instance, now I am buying this phone and I'm reselling it. I bought this phone for 100,000. I paid VAT of 5,000, making 105. So if I want to sell it to you at 200,000 and I put 7.5% VAT on it, the law expects me to take that 7.5% VAT that I've collected from you, deduct the VAT that I have suffered, okay, which is usually called impute VAT in taxation parlance. You take out that impute VAT that you have suffered. So it's the balance that you're supposed to pay to the tax authority. All right, so what this does is that any purchase by diplomats, okay, ambassadors, US ambassadors to Nigeria, so all of those kind of sales, they are not liable to VAT, 0%. So any humanitarian donor funded projects, usually people argue that churches, mosques should fall under this last one. That is usually humans that fund church operations, okay, or fund mosque operations. So if you're selling to a church or a mosque, an NGO, you shouldn't charge VAT. So that's the provision of the law. As long as it is an humanitarian donor funded project, VAT should be charged at 0%. Oops. I'm sorry, I know my time is fast spent.
Go ahead.
I should go ahead.
Yeah,
okay.
go ahead.
Thank you. Thank you. So on withholding tax, I have talked about withholding tax that when you make payments, so as a business, when you make payments, so you called a plumber to come help you fix something in the office, you called a carpenter to fix something in your office and what have you, and you are paying them as a business, you have an obligation to take withholding tax at 5% from such payments. Excuse me, from such payment, because if you don't, the day that revenue decides to come and review your record, the day revenue decides to come review your record, you will end up paying the amount you didn't deduct from that guy. You know, you paid him all his money. You end up paying that whole amount plus penalty and interest. So that's how terrible it is when we decide not to do what is right by charging those people who ought to have paid the money. So now you need to start looking out for any kind of payment that you want to do. So except in a case where it is a statutory payment that you're paying to government, in that case, you cannot take withholding tax, or it is something that is done in the ordinary course of business of that other party that you are paying. So for instance, you go to ShopRite to buy something. You cannot say, oh, I want to take withholding tax before paying you this money. I have an obligation. So government sees that one as it's in the ordinary course of business of ShopRite. You just have people working and give them what they want to buy and they pay. So if it's in the ordinary course of the business of that party, you have no obligation to take withholding tax. So that's the provision of the law. But anything beyond the normal course of business of that entity, okay, and there is maybe a form of contract, negotiation back and forth. So at the end of the day, you have a contract that is the basis of that transaction. You have an obligation to take withholding tax. I have here the withholding tax rate that are applicable on several kinds of transactions, from rent to dividend, interest, directors' fees, technical management fees. All those ones are 10%, consultancy and all of that. So there are, at times you may have to do 5% if it's an individual that you're making the payment to. So for this one that I have, consultancy, professional fees, commission and royalty, when you're paying the same monies to a company, you take withholding tax at 10%. When you're paying to an individual, you take at 5%. So in some of those cases, it varies. Then for construction contracts, for either building, roads, bridges, plants, for a plant, okay, withholding tax on those is at 2.5%. That was recently reduced from 5% based on the Finance Act that became effective in February. Then stamp duty is usually on the value of transactions. So they call it ad valorem rate. So it's at ad valorem. It is based on the value of transactions. So usually stamp duties only happen when there is a document of executing a contract. Okay, so if there is a document, the moment there is a contract, you have to stamp it for that document to be tenable in a court of law. So that is the requirement. Then the 50 Naira story, I've talked about this, so we are all aware of that, as long as you operate a bank account in Nigeria. So that one is at a flat rate of 50 Naira, as long as you have a transaction that is above 10,000 Naira, and it's not from a savings account or within the account of the same owner. Okay, so these are the kind of collections that are done by local governments. I think I've mentioned this briefly initially. Shops, kiosks, shop and kiosk rates, tenement rates, right of occupancy on land, market tax levies. You know, you go to the market, you park, there's a car park, all those kind of money that they collect, vehicle, radio licensing. I've had people who told me that, see, my office has been here for long, and surprisingly, maybe after about 3-4 years of operating the business, I just had people from local government, they just approached and they brought a bill of 250,000 saying that this is my radio registration and television. And I was like, are you sure there is radio in these premises or even a television? But in actual fact, there was nothing like that. But you know what happens is that when government needs money, they probably just look at the budget. How much are we trying to generate? How many businesses are in this environment? They divide it by, and they start sharing it and start looking, you know. So it has gotten that bad. So some of those things still happen: signboards and road closure, advertisements, permits, merriment, motor parks, public conveniences, religious places, establishment, and permit fees. So at times when you see local government come up with all those things, you may feel that why do they have the tax authority? Yes, the Taxes and Levies Act actually gives them the right, you know, for this kind of collections. So the only issue is now the fact that their own doesn't have a rate, okay, and it's not a percentage. So they can just come up to you with any figure. So it depends on your negotiating power that, see, I don't have this money. It's only 5,000 that I have. And if you don't pay that money, they won't allow you to rest. You know, those kind of things. So at the end of the day, you want to compromise a little that, okay, revise this, your invoice to 5,000 naira, then I pay, and then we can all move forward. So what is your obligation as a business owner? One, your obligation is to register, all right? So if you are yet to register with the tax authority, the Federal Inland Revenue Service, register and obtain your TIN. Then also register with the State Internal Revenue Service and obtain your payer ID. So after registration, the remaining obligation you have is that when you are selling, charge VAT, collect the VAT and give it to government. If you're buying, before you pay, all right, take withholding tax at the applicable rate and give it to government. Because if you don't do those things, at the end of the day, government comes back to you for the principal plus penalty and interest. Okay, then also when it comes to the direct taxes, at the end of the year, because most of these direct taxes are annually done, except for maybe payee that is based on employment. So at the end of the year, you want to review your records that, okay, and there is something I also need to mention. Most growing businesses or most young businesses, they don't keep proper records, proper documentation. See, I would like to, you know, tell you something today for free. Okay, you'll find this valuable maybe a few years down the line. As a business, every single transaction of sales, so you are selling and you have issued an invoice. So if you're the kind of business that doesn't have an invoice, please ensure that from now on that you have an invoice. These things will save you from a lot of headache, from a lot of tax problems in the future, I promise. Ensure that it's an invoice that is documented and you keep them. You are paying somebody, ensure that the person gives you a payment, gives you an invoice for what he's charging you, and you have a payment voucher in your own records. Keep that invoice across the payment voucher and archive them. Archive them. Because for a tax man, I promise you, what a tax man is looking for is for you to be able to defend yourself using documentation, documentary evidences. So in a case where you don't have documentary evidences, there will be a problem, all right? So when you are using mouth to argue and argue, when they ask you for a document and you cannot provide it, they'll just throw out the case and they will insist that, okay, we have billed you reasonably. We figure out that for your kind of business, at least you should be able to pay 500,000 or 500 million, and it's binding on you, except you are able to defend your case with documentary evidence. So I would like to encourage us as businesses, let's ensure that we keep proper documentation for every single transaction that happens in your business. So you registered, you've assessed the tax collected and remitted to government, then you file your tax returns. For VAT and withholding tax, you have an obligation. You know, I talked about for CIT, that 6 months after your accounting year end, you have an obligation to file your income tax returns. For VAT is a monthly thing. For withholding tax is a monthly thing. The Finance Act recently increased the penalty for non-filing VAT to 50,000 in the first month of default and 25,000 in every subsequent month. So you can imagine, if you want us to take that, so you can imagine, and it has to be accumulating. You cannot stop it to say, okay, I didn't file returns for April, so I'm only paying penalty for April. No. So if you don't file for April returns is due on 21st of March. So it's the following month that it becomes due. So if you don't file by the following month, they take that following month as the first month. So 50,000 has accumulated. That is May. June, 25,000. July, another 25, up till when you pay that, or when you file that return. So you can imagine the headache and the problems that you'll be creating if you avoid filing of this return. So for VAT and withholding tax, it is due on the 21st day of the subsequent month to which that transaction relates. So I've mentioned the relevant tax authorities, the federal and the state tax authorities, so you can file. So for you to register, what do you need? Basically, all you need is to approach a tax office, approach a federal tax office or a state tax office. So for federal, just put together all your business registration documents, your MEMAs, articles of association, secretary of incorporation, from CAC, that's directors, and all of them. Just put all of them together and go to a tax office. When you get there, ask for the taxpayers section. When you get there, I promise you, you get somebody that will put you through what to do on registration. And they will also guide you on how to file your returns on a monthly basis. So it has become less cumbersome, you know, unlike what it used to be previously. So if you're an individual, you also have to register with Federal Inland Revenue Service. But instead of taking certificate of incorporation and all of that, you just take your business name registration documents with all the other documents, and then you approach the tax office and you do your registration. Similarly, you approach the state internal revenue service of where you live. I've mentioned it again, where you live. So just go with all the same documents. Okay, they may tell you if you have staff, so they may request for the information about the staff, how much you pay them, or what you are projecting that you pay them. When you give them those projections, if they change, you also notify them that it has changed, so it's not a cast in stone. The tax clearance of the director, so that means maybe you or maybe another director of the organization, then you have a letter to apply that, okay, we want to register to come properly into the tax net. And from there, you can now fulfill your tax obligation. So I'm just going to quickly take us through this timelines for filing tax returns. So for personal income tax returns, if you're an employer of labor and you have staff working for you, there is an annual return that you're supposed to file. Every 31st of January, you're supposed to file the names, the salaries and taxes of all your employees for the past year. Okay, so by January 31st, 2021, you're supposed to put together all the salaries that you have paid all your staff for January to December 2020 and file that with the tax authority on or before 31st of January of 2021. So you as a director, you may have direct assessment, you are not on salary, so you can only evaluate your income or your profit on an annual basis. By 31st of March of 2021, you ought to have done a return of what you generated in 2020. Okay, so for companies, I mentioned this before, 2020 financials is due for filing by 2021 June, if your accounting year is December. If your accounting year is March, it is due in September. So that does it. So just calculate 6 months after. Capital gains tax happens when that transaction happens. Stamp duty is the same thing. Value-added tax on a monthly basis, I've mentioned this before. Withholding tax is also on a monthly basis. Petroleum profit tax is a monthly kind of tax that they pay. So they pay on a monthly basis. When it's petroleum profit tax, you pay on installments. So tertiary education tax also has to do with companies' incomes for companies. So that's about 2% of accessible profit. That's also payable. You file it along with your company's income tax return. Information technology levy is 1% of your profit before tax. You also file it with companies' income tax returns. But then that one is essentially for businesses in information technology environment or financial services. So it's not for every business. I'm talking about the information technology levy. It's not for every business. As long as you are in this sector that I've mentioned, IT or financial service, and your turnover is above 100 million, then you do 1% of your profit before tax and remit it to the government accordingly. So I mentioned payee. So for all your staff, take out before paying the salary, take out the payee tax. For January, ensure that before the 10th day of February, you've remitted to the relevant tax authority of where those staff are living. I've mentioned that for individuals, what is important is where they are living and not where the business is. Okay, so for personal income tax and direct assessment for you as a director or the business owner, 30 days after assessment, usually the state authority will give you a direct assessment. So they will just say, okay, submit your income that you have made for 2020, and they will assess your taxes and tell you, okay, you are paying so much. So if you don't dispute, if you feel that that thing is fair enough, you go ahead and pay. If you feel that, oh, how should I be paying this much money? You have an opportunity to object within 30 days of receiving that assessment from government. Then any additional assessment that you get from the Federal Inland Revenue Service on corporate tax audits, because occasionally the tax authorities will come for tax audits or investigation. Okay, so usually you have filed your own returns when it was due. They will now come back to review your records that, okay, what this person has filed, is it correct? Okay, so if they see that, oh, this person has fallen short or this company has fallen short, they will raise an additional assessment to say, we have paid the additional amount that is due. So that is payable. It is payable 60 days after you get that assessment. So I've talked about objection. Please, if any tax authority gives you an assessment, ensure that within 30 days, write an objection. What should be in this objection? Just see the letter that is sent to you or the assessment. Address your letter back to the organization that has sent it to you, federal or state, and put there the reason, the amount that they've asked you to pay, and the reason why you feel that you are not liable to be paying that amount, and send it back to the tax authority. That has to be done within 30 days. Otherwise, after 30 days, that assessment becomes binding on you, no matter how huge that assessment is. So you want to avoid those kind of, stories or issues. There are times where the tax authority will say, okay, we are not amending this assessment. We are giving you 50 million because we believe that based on documents 1, 2, 3, 4, like I mentioned, in a case where you think it's not 50 million and you don't have a document to prove that it's not 50 million, you know what happens? Tax authority will insist that no, this is the evidence that we have. It is 50 million. And as long as you cannot defend it, it is binding on you. So they may refuse to amend. So you want to go to tax appeal tribunal, all right, to file a case with them that, see, these people, they're refusing to amend. From there, you can go to court, high court, you go to, so it progresses that way. So the taxpayer has an opportunity to reject an assessment and appeal for it to be amended. So the moment you've already paid your taxes and all of that, you're entitled to a tax clearance certificate. For the company, there's a tax clearance certificate for the company. That's what you usually call TCC. That's a corporate one. You get it from the Federal Inland Revenue Service. For the individual, you get it from the state tax authority where you are registered. So and usually when you go to the tax authority, they will tell you what you need to do. At times, you need to fill application forms. Some are online. For some of the tax authorities, they've automated their process. Some are online, but some are still manual. So you have to still fill the forms and take it to them with all your details. And usually within a month or 6 weeks, you should get, that's in the worst case scenario, if there is no problem with your record, you should get a tax clearance certificate. So quickly, I will just browse this highlights of the Finance Act because I know that I really overshot my time. So I'll just quickly browse this. I've mentioned quite a number of the things that are happening here. I've mentioned them, in the previous slides. So the first one is saying that small businesses are not supposed to register. They are not supposed to register for VAT, unlike before. Small or big, you are supposed to register for VAT. But now, if your turnover falls within that 25 million threshold, you have no obligation to register for VAT until the month where you hit that 25 million threshold. All right. So January, February, you earn 5 million, 5 million, 5 million. and then in April, you earn 10 million, making you have hit the 25 million. You don't have obligation to file to charge VAT in April. Then in May, you're supposed to go back to the FIRS to notify them that, okay, I have hit that threshold of 25 million and I want to start charging VAT. So you have to notify them, and then you will subsequently start charging VAT. And also there is something about this threshold. If you are a business that has previously earned more than a turnover of 25 million before, okay, so that's before the Finance Act came out, maybe 2018, 2017, those were the boom periods for you, and you were earning 30 million, 35 million. This provision doesn't permit you to now stop charging, because it means that you have passed that threshold before now. So this provision does not apply to you. So this applies to new businesses who have not made an annual turnover of at least 25 million previously. All right, so output VAT and input VAT, these ones are now based on the actual payment. Before it was based on invoice, so this is now based on actual payment of VAT that you have suffered or actual collection that you have received. So basic food items, I've talked about this, so I wouldn't want to overflog that. So the expansion, okay, so I've talked about tuition. These ones are recently introduced by the Finance Act. So what I didn't mention earlier was services rendered by microfinance banks, people's banks, mortgage institutions. They are not liable to VAT. So if you have any transaction with them and they are charging you VAT on their fee, please tell them that they are not liable to VAT, so they are not supposed to pay. Then intangibles are now liable to VAT. So patent, copyright, there has been a lot of court issues, cases, on intangibles. So now the Finance Act has clarified that anything that is not land, that is not money, or that is not shares or securities, okay, those are the three that are exempted from VAT as intangible. So every other intangible, maybe rights in a oil, mining lease, and all of that, they are liable to VAT. Okay, so that was just basically to clarify the contention in that area. I've mentioned this now. So imported services are liable to VAT, while exported services are not. Okay, so you are rendering service to somebody outside Nigeria, you shouldn't charge VAT. Okay, but if you're receiving service from someone outside Nigeria as a business, you are expected to account for the VAT by yourself and remit it to the government. So now there is also something called reverse charge. So, I mentioned that you have the obligation to charge VAT. Okay, so in a case where somebody is rendering service to you and the person didn't charge you VAT, and you did the transaction and executed it, what the revenue is saying is that you who allowed that transaction to go without charging VAT should account for the VAT. You charge yourself. All right, so you charge yourself and go and remit it to government. So you see why you shouldn't even you can't afford to allow somebody to give you an invoice that doesn't have VAT, except in the case where that transaction is exempt from VAT. You should ensure that invoices that you receive have VAT on them, except if the person is claiming that, oh, we are still within the 25 million naira turnover threshold. So non-resident companies who are earning income or making profit from Nigeria are expected to file tax returns in Nigeria. So whether or not they are registered in Nigeria, as long as they are making profit from Nigeria, they're expected to file tax returns in Nigeria. So the Finance Act also introduced a 5 years tax holiday for agricultural production businesses. So if you are going into agricultural production, for instance, all the farm and all of that, as long as it's production, for the first 5 years, no matter how much you earn, the tax law is saying you are not paying any taxes. And of course, this is because the government is looking at encouraging businesses, a growth in that sector. I talked about the fact that agriculture is growing in Nigeria, and government wants to do more to ensure that it grows more. So this tax exemption is not even just for 5 years. You can go back to government to apply for an additional 3 years. All right, so it has a 3 years extension. First point, 5 years, then 3 years extension based on satisfactory performance. So if they see that, okay, this business is actually booming, of course, they will allow you to have the remaining 3 years. So I've talked about the construction withholding tax has been changed from 5% to 2.5. Okay, so I've also talked about the fact that you have to provide TIN when you open an account with a bank. So interest on foreign loan, formally, it used to be 100% exempt from tax based on certain conditions and criteria, but now that exemption of 100% has been reduced to about 70%, okay? Also, interest expense on loans from foreign connected persons. So if you're a Nigerian entity and you have a foreign parent, these are things that businesses in Nigeria, most times foreign business who come to register in Nigeria. So you see an Indian business come to register in Nigeria, they have Indian parents, the Indian parents will be funding the business in Nigeria, and then the business in Nigeria will be reporting losses on an annual basis. Why? Because it's paying out all this revenue as interest to the parent in India. So at the end of the day, they are eroding the profit that is supposed to be taxable in Nigeria and pushing it out, all in the name of, oh, I'm paying interest. So what this provision attempted to do is to say, okay, no matter what that interest is, we are restricting the interest you can claim on an annual basis. So that has been restricted to 30% of earning before your interest, your tax, your depreciation, and your amortization. So every other thing that is remaining, you can be carrying it forward up to a maximum of 5 years. After 5 years, that is the end, they are no longer claimable. Then dividends paid from petroleum profits, they are now liable to withholding tax deduction at 10%. This thing used to be before, it was free. Okay, so petroleum companies that paid dividend prior to the Finance Act paid it without taking withholding tax. But the Finance Act has introduced a 10% withholding tax from any dividend payment a petroleum company is making. So also there is an additional provision that expenses that you are incurring to generate profit that is not liable to tax, we won't allow it for tax purpose. So that's just being rational. Then taxes or penalties. So if you as a business, you keep paying fines and penalties on behalf of another person. On behalf of another person, government is saying that no, we are not going to allow this for tax purpose. So excise duties are chargeable on imported goods. So when something is available in Nigeria and you choose to go and import your own version, you will pay excise duties on it. That's what government, so they're basically trying to discourage importation. So if raw materials are available here and you choose to go and source your own, you pay excise duty on it as well. So RECO, these are real estate investment companies. There are certain incentives that have been given to businesses in this environment to stimulate the real estate sector. Okay, so quite a number of that is in the Finance Act, and I won't want to bore you with this because it's quite a little complicated. Then objection to tax assessment may now be delivered by electronic means. So in a case where you are far, So in a case where you are far from where your tax authority is, so you can now send an email to say, oh, this assessment of 50 million that you gave me, I am objecting to it within 30 days, even though I cannot come physically to drop that objection in Ogun State. I am sending an email and it is tenable now in the eyes of the law. Okay, so I mentioned the fact that failure to register for VAT. Okay, so if you are a business that is supposed to register and you didn't register, 50,000 for the first month that you failed to register, 25,000 for each month that you choose not to register. So as long as it continues, when you go to the tax authority, they'll just give you a template to show you where it started flowing from. Okay, and that's part of what the Finance Act has introduced. So if you fail to register is an offense, if you fail to submit returns is an offense, then in a case you change your business address and you don't tell tax authority, it's also an offense. In a case where you cease business operations permanently, okay, so that means that the government has been receiving your VAT returns prior to a particular time where you feel that, oh, I cannot continue with this business, I have to discontinue. Okay, and you see that business operation and you don't notify the revenue within 90 days. From that 90 days, they start counting for you, 50,000 for the first month, 25,000 for each subsequent month. Okay, and I won't want to explain what that will amount to at the end of the day when they come knocking. Okay, so this is an additional incentive for middle-sized businesses. I mentioned that tax returns is due for filing 6 months after your accounting year end. So if you file your tax returns 90 days before that 6 months. So which means that if it is due in June, you filed in March, the government is saying that that's your tax that you are paying based on that returns. We are giving you 2% of it as an incentive for early payment. If you're a small, middle-sized business, and if you're a large-sized business, 1% of that amount that you are paying as taxes, we are giving it to you as incentive for coming up early to pay your taxes. So here I am. Thank you very much. I think I've been able to probably rush a couple of things.
Thank you so much, Rumi. Wow, that was I think one of the most comprehensive sessions I've ever attended on tax, when it comes to explaining tax and how it impacts on businesses. So as expected, we have a whole lot of questions. So ladies, I can't assure you that I'm going to take all your questions, but I will try as much as possible. And Bume, I forgot to mention that we're also streaming live on YouTube, on our YouTube channel,
really?
For those who are having challenges. So I'm going to start with the questions that have come in from YouTube. And just because, they seem a bit easier than the ones on. Okay. So Eboluwa Olawoyin is asking, how do we obtain invoice from local farmers?
Invoice from local farmers.
Yes, so I suspect she's in agriculture, and you had mentioned that anything you pay out for, you should always get invoices for them. So now she deals with local farmers. How does she obtain invoices from them?
Okay, quite a lot of business. I'd mentioned something about the informal sector. Quite a lot of businesses don't have structures, and those playing in the agricultural sector, especially the farmers, are probably top on that list. If they don't give you an invoice, you also need to help them understand the implication of some of these things. Okay, because you have an obligation, you owe it to your business to ensure that there is an invoice for anything you're paying for. They ordinarily shouldn't be asking you for payment without an invoice. You should let them know that, see, it is the same law that is binding on you that is also binding on them. It's not as if they're exempt from that law. And if it's a provision of the law, you need to help them understand. One of my clients once came to me and was telling me that, see, you've talked about withholding tax, you've talked about this one. I am dealing with artisans, and they don't even want to hear the story about all of these things. And I told him that it's one of two things. It's either you educate them and help them to understand, all right? Or you prepare yourself to bear that tax liability when it comes. So it's just a matter of making provisions. And of course, that is not sustainable. So you want to start educating those other parties as soon as possible. Because if you don't have, just make sure that they sign some sort of document. They may not have invoice. And funny enough, some of them may even be very illiterate that they cannot even sign. You can just design something for them. Make sure that there are two parties on it. One, you, and the other is that entity. Let them thumbprint. Just make sure that you have some form of evidence to save yourself and your business from the burden of have to pay undue taxes in future. So it's just basically about educating them and letting them know what is at stake and the fact that, okay, this is a law that is equally binding on you as it is on me. So with time,
Okay. So Amarachi Odunkwe is also asking, you said food was exempt from tax. Does this apply to from VAT, apologies. Does this apply to dog food?
Dog food, no.
Okay.
It doesn't.
All right. Oluwa is also asking, and for personal income tax, I'm trying to look for the question now. Is this on total salary, on gross salary, on the net?
Okay, there is actually a template for calculating it. Okay. All right. So there is a relief. There is a relief that is claimable, and the rate is a graduating rate. Is a graduating rate table. So what the law says is that for the first 300,000, so out of your annual income, the first 300,000, you do 7% of that first 300,000. The next one, you do another 9%. The next 500, you do 11. The next 500, you do 15. 1.6. So it's a graduating table. So it's not something that you can calculate offhand, but I can give you, I work with Pedable. I know that has been mentioned initially. You can go to www.pedable.com. We have a tax calculation table. Okay, template that is on our website that you can. So just feed it in with your information that, okay, this is my income. It will calculate and take, because there are reliefs that are claimable. So I should mention that actually 20% of that your salary. So if your annual salary is 10 million naira, 20% is relief, okay? Is claimable as a relief before you start charging the balance to tax based on this graduating table that I'm talking about. So if you go to that website, you see our payee tax calculator, just plug in the numbers and it will generate the taxes for you.
Okay, thank you for that. Vivian says, my business was registered last year as a sole proprietorship. When do I start paying tax?
Okay, so I had mentioned that as a sole proprietorship, you are seen as the same thing as your business. Okay, so if you registered your business, maybe last year was 2019, okay, excuse me, you are supposed to file a return, you as the business owner now, you are supposed to bring together everything that you have earned, your income, and all your business expenses. So the tax rate is not directly on your income. So you bring the income, then all the business expenses that you have incurred. So the reason why I've been talking about documentation is that for the tax man to validate those expenses and say, okay, Vivian has actually paid this money, he needs documents. So that's the reason why you are keeping those documents. So just take out all the business expenses, your rent, the salaries, diesel, generator, costs, and all of that. Every operational cost that relates to you earning that income, deduct them from your income, okay? And then the balance is what you start talking about paying taxes on. So because you registered last year, there is a return that you ought to have filed by March 31st, 2020, okay, based on what I've described now. So you generate your profit based on that calculation. So you're supposed to file your returns by March 2020, but I'm aware that Lagos State has sort of extended it till, so if you are living in Lagos, Lagos State extended till end of June, or thereabout, it's about end of June now. So that means you have up till end of June to put all these things together and then file your, so what I'm saying is this, it's not compulsory that you have taxes to pay. If all your expenses are valid, all right, and usually for businesses that are just starting out, it's expected that in the first few years of business, you may be making losses because you're just trying to find your feet. You're just starting, all right? So some losses are, as long as there is documentation to substantiate them, okay? So just make sure that those documentation, so you may be making a loss and at the end of the day, you're not even paying any taxes. The obligation you then have is to submit that returns. Lagos State government at the moment has a website. Theirs is more like online now, so you can just go online to do your registration. Sort of, you can do it as an individual online, and then they will give you certain things to steps to follow. So if you're making a loss, you don't have obligation to pay taxes. So your obligation is now limited to you submitting the returns.
Okay.
All right. So when you submit your returns, the revenue will look at it. If they feel that this looks correct, they may request for certain documentation, you know, to support what you have said. So if their documentation is good for you, so that means you probably may not be paying. But if they are not, they may insist and say, no, you're actually supposed to be paying some sort of tax.
Okay. So final question we'll take from YouTube is from Omalara Manua, who says, are exported services liable to VAT?
No, they are not.
Okay.
So that's why I mentioned earlier that it's only imported services that are liable to VAT, but exported. So usually VAT is payable in the jurisdiction of the consumer. All right. So if you are exporting service, that means the person consuming is not here.
Okay.
So the VAT payable is the one of that jurisdiction. So that person will sort it out with the regulatory authorities in that region.
Okay. All right. And so we have an first question from Zoom is from Yinka Lajide. And she says, do I need to make payments to the government if I register a company, but I don't actually start the business for several years?
Okay, so the business is registered and
But she's not
she hasn't
started
commenced
operations.
operations. Okay, so like what I mentioned, so if you have not commenced operation, that means there's even no income.
Yes.
That means you're not earning income yet, okay? The only problem is where you have a bank account that is receiving money in the name of that company. That's the problem. That's the problem. So in line with the tax laws, even if you've been registered for over 2-3 years, there is a requirement of the law that you must file a tax returns 18 months after your incorporation date.
Oh,
yes.
Whether you're doing business
Whether
or
not
not.
You're doing business. So you probably just prepare a statement of affairs that shows that, okay, there is actually nothing. So you get an auditor to prepare a statement of affairs to you and you submit it to the tax authority that there is nothing, these are my numbers and all of that. But where you can have a problem with that is when something is entering the bank account that is in the name of that same business.
Okay, so let me twist that question a bit. So what if you're registered as a company, but there's no bank account?
So of course, if there's no bank account, there's nothing to trace. Okay. Except, so if you're registered as a company and you're truly not rendering any service, so that means there will be nothing to trace besides a bank statement. And if you don't have a bank statement, of course, and even if you have a bank statement and there is no inflow or outflow. Of anything, you're safe. You're safe. You don't have to do anything. You don't have to file returns. You have to. That's why I said that 18 months after incorporation, you have to file returns. It's just that you don't have to pay taxes when there is no base. So if you don't have income, you're not paying taxes. But you have to still do that disclosure by making up an account to say, okay, these are my books. Nothing happened for all these years that I've been registered. But because it's a requirement of the law that 18 months after incorporation, then that's when you now put that account together and submit to the tax authority just as a way of complying with tax here. I'm sure that a lot of people don't know that. I didn't even know that either. Well, I know that is actually the case with most. Okay, so so she's now asking, so what's the penalty if I've registered the company 18 months after I've not filed? What's the penalty? So the penalty is 25,000. You don't file your returns. So the first month is 25,000. Subsequent month is 5,000. So if, for instance, you registered in 2014, your returns became due June 2015, okay, from incorporation, and you didn't file. From that June 2015, 25,000 will start, July, and it continues until the year. You can imagine. So that, people have had cases where they eventually go to because of course, these are some of the things that chase people away from the tax authority because they're like, where do I get this kind of money from? But usually, what you should even do is to even start, because the longer you stay away, the more the penalty you are accumulating. And the moment you come forward, you can add that. The interesting thing is that the revenue may not even remember that penalty now. They may not even talk about that penalty. Now they are seeing you as a business that is coming to fulfill its obligation. Okay, so even if it ever happens, there have been cases where I saw that, okay, entities go back to them. See, I've not even started anything. No income. So if you are giving me penalty, there is nowhere to pay it. But at the end of the day, they take it down. All right, so several of that has happened, but the best thing is start as early as possible. Then you can start taking care of the issues that will be coming up from them. Okay. Okay, but I need to clarify this because a lot of people would fall into this. Because I know so many businesses have fallen into this trap. So what if I then say, oh, I registered a company in 2014. I realized that, okay, I've not done anything. 5 years later, they've slammed me with a bill. A lot of people will be tempted to say, you know what, I'll just dump that company and register a new one afresh. What are your thoughts concerning this? A lot of companies actually do it. But the thing is that if there is already an assessment from the tax authority, there's a problem. So in a case where you feel that, okay, this name has just been there, I've not done anything with this, you can take it out because you are looking at the risk of, what if they tell me that I add 18 months after incorporation returns and I didn't do that returns? So you could actually take it down and start something else if you feel that it doesn't take anything from you. It's possible, very possible.
Okay, okay, all right. So Oluwatosin Awoni say, okay, no, sorry. Oluchi Anoro says, for a small business, e.g. Instagram business brand, is tax expected to be paid?
Yes, please.
Okay.
You know, what happened was that prior to the Finance Act, a lot of things were actually escaping the tax net, like I mentioned earlier in the informal sector. So this Finance Act now has introduced that any online business, any nature of online business is liable to VAT. So you're expected to register, pay your VAT. Charge. Interestingly, most informal business don't even know how to charge VAT. All right, so they don't even bother charging, and they're thinking, okay, what if I charge and my customers run away? So if you don't charge them, you will have the obligation to charge the VAT and remit it to the tax authority. So now it's that bad. So in a case where you are trying to defend your customers, you as the business owner will have to bear. So I think gradually you just start educating, because now it's liable to tax. You just start educating your customers to let them know, okay, see, this is what is obtainable now. Have you even complied with this? Because they're coming for us. So that education helps the mind of people towards acceptance and all of that, at least on a gradual basis. I know it's not easy to pay tax, I know. Okay, but on a gradual basis to avoid paying undue penalties.
Okay, thank you. We have a question from Tosia Woni. So she says, my small business does not earn up to 2 million monthly or annually in Nigeria, but I have been remitting VAT since the year it began. But I stopped last month when I got to know about the new finance bill in Nigeria. Did I do the right thing?
Okay. I would like to ask, I'm sorry, I didn't get her first name.
Tosin.
Tosin, I would like to ask Tosin, has a business ever made up to 25 million per annum before? Ever before?
Okay, so whilst we wait for her to answer, let me, so she says, the bank asked for my BVN when I opened my business account.
Sorry, just one second, let me just quickly check.
Okay, so she's answered, she said no.
Thank you. Yeah, sorry. I'm sorry,
Okay.
I just needed to take that call.
Yeah, that's fine. Okay, so she answered that no, she's never made up to 25 million before.
Okay, so if she has never made up 25 million, she's safe.
Okay, she's fine. Okay.
Safe until she hits that threshold.
Okay, so she's saying that when she registered her bank account, her business account, sorry, the bank asked for her personal BVN. Does this mean that FIRS can look into her personal accounts too?
No, you know, it's because she probably registered it as a business name.
Okay.
I'm not sure if it's part of the requirement for the bank, but in a case where it's a business name and the individual is seen as the same person as the business, okay, and you know, if one single person is opening several accounts, as long as your name is tied to that account that you're opening, the BVN has to be one and the same.
Okay, okay.
Yeah, so that may be the reason why they are requesting for it.
Okay.
But not necessarily the FIRS wants to track. No, that's not the case. I think it's just basically for banking requests.
Okay, so I'm just going to read out a question that Oluchi read, but I'll answer it. I mean, so she said she registered a business name in order to trademark it, but the business is not yet running. CAC has sent her a notification that she has been registered alongside the TIN. Will I still be expected to pay tax? I mean, Bumi has answered this. You're not expected to pay tax, but you're expected to file returns, whether it is operational or not.
No.
Okay?
So the moment you hit that 18 months after incorporation, you have the obligation.
Yes, 18 months, yeah. Okay, so Chairman says she thinks she's getting confused. So businesses with turnover of 25 to 95 million pay 30% of profit as tax?
No.
Okay.
Should I take that? Okay,
Yes, please.
so here it is. Businesses with annual turnover from 0 to 25 million. Their tax rate is 0% on their profit. Of course, if they file their returns, because that's the only time where they have the opportunity to claim that exemption. So from 0 to 25 million is 0%. You're not supposed to pay, except you default in filing. So for businesses from above 25 million to 99.999, so that is less than 100 million, the tax rate is 20%. So from 100 million and above, that is 30%.
Okay. So she now asks, so after this 20%, are they still expected to pay 7.5 VAT in addition to the 20%?
Okay, let me explain that.
Okay.
Let me explain. This is VAT. You know, you are not the one who is suffering that VAT. Look at it this way. You have a business. In a year, you made a profit of 99 million. So that means your tax rate is 20%. Of course, some adjustments will be done on that profit for tax purpose. And if you have 99 million, you do tax at 20%. That is your annual tax returns filing. For your VAT, what it means is that in making that your 99 million profit, each time you make sales, you have put your own 100,000 that you said, okay, this is my invoice value. Then government now says, ask that person who is paying you to pay 7.5% of this your invoice value to me. So you see that it's that other person that is paying it. You are not the one paying it. Government is just using you to collect it and remit it on a monthly basis. I hope that clarifies for her.
Yeah, but I think, the challenge is that a lot of businesses do not bill the consumers the VAT charge. So I think that's where the confusion is coming
So
from.
now the problem, as long as it's a vatable transaction, the problem is the person who is selling is now taken as the culprit if he doesn't charge and collect that VAT from the other party. So that's where it becomes very unfavorable to business owners.
Okay, so Amabet, I don't understand your question. You may have to, send the question again. Okay, so someone is saying, can you please explain the concept of withholding tax? We used to need to pay withholding tax on a business with less than 25 million.
On a business with less than 25 million. Okay, let me, I'm not sure if that's the question of the person, because you are not paying withholding tax on the business. All right. It's just that when you are paying somebody else, you are supposed to take withholding tax. Okay. So for instance, if your business has not made up to 25 million in a year as annual turnover, so you are probably looking at yourself, oh, I actually shouldn't be paying tax. So somebody shouldn't be taking withholding tax from me. So it's the one they're taking from you now that you should be concerned about. So somebody shouldn't be taking withholding tax from me because I don't have tax obligation for income tax. Let me mention that withholding tax is an advance payment of income tax. Do we understand it? Okay, so let me just explain
take that again.
Mm. Okay, so income tax, like I've explained, is 0, 20, and 30%. Okay. Government is simply saying that because income tax is an annual thing, and these businesses will have to pay income tax on an annual basis, but I need money on a monthly basis. All right, so if you are earning money from me, so I'm supposed to be paying you money. Mm-hmm. Remember that anything I'm paying you is what constitutes your turnover and ultimately where you get your profit from, which is liable to tax. Mm-hmm. So government is saying, don't wait till the end of the year for Kehinde to come and pay me the money in one lump sum. I don't want to wait. As you are paying her for the service she rendered to you in January, take 5% and come and give me. I will give you a credit note for her. She will keep it. That credit note is also the same thing as money. Okay. So at the end of the year, when Kehinde is going to pay her income tax, she will use that credit note as part of tax already paid. So if she calculates her tax and it's something like 100,000, and she checks the credit notes that she has collected. So that's important. When somebody takes withholding tax from you, ensure that you collect the credit notes, because that thing is money. So at the end of the day, if on an annual basis that Kehinde is going to calculate her annual income tax, she will then collect all the credit notes that she has. So if the tax she's paying is 100,000 and she has credit note of about 80,000, she will give the government that credit note as money, that take 80,000, I'm only owing you 20,000.
Okay.
I hope that is clear.
Yes, that's clear. At least it's clear to me. If it's not clear, please just resend the question. We've never had so many questions. Okay, so Beckley Mary says, okay, I'm working for government. I'm an employee of government, and I'm paying tax to the government, and I have a small company by the side. Would that not be double tax that I'm paying to the government? They're already deducting tax on my salary.
Okay, so this is what happens. Taxation is payable, I said direct tax is payable on the income you are making, profit you are making. So you earn income from government, the subject to tax, right? Are you earning income from that business? Again, that side business, as long as you are earning another income from it, except you're saying there's no income from it. As long as you are earning another income from it, it is liable to tax. So even though that money you collected from government, which has already been taxed, is the capital that you put into the side business that you are doing. All right, you have a way of recouping your capital, because it's your profit that is going to be taxed on that business. So it's the profit that you are making that will be taxed, not your capital, because your capital is what you are paid tax on. What you are putting as capital is what you are paid tax on. So it's the profit you now make in addition on top of that money that you are putting in that side business that is liable to tax.
Okay, all right. Okay, so a lot of these questions are similar, so I'm not going to ask that. So let me just clarify, please correct me if I'm wrong, Bomi. Okay. If you register a company today, you're expected to file returns 18 months after, whether or not you have an account, whether or not you've made profits, whether or not money has flowed into your account or not. You are expected after 18 months to file returns, right?
For CIT purpose, for company's income tax.
For company income tax.
Yes, for VAT, you are not expected.
Okay.
It's only for company's income tax, which is the annual returns.
Okay. So I mean, the reason why I clarified that was that a lot of a lot of people are asking, questions around that, so that I can skip all those questions.
Okay, let me also clarify.
Okay.
That for that, usually, even FIRS may not even remember to come ask you, because most times they are not even aware of the registration, except there is something that triggers, or you do something, or you transact business with another entity before they even get to know. All right. So most times they are not even aware. So there are usually some businesses. Okay, you're registered, you've not even started actual operation, but you want to obtain tax clearance certificate. Okay, so that's when they will now go to check, when did you register? Your account was due 18 months after registration. So naturally, they don't come looking for businesses that have not come in. That's not really their focus. No, that's not their focus. Their target is businesses that have commenced and they are making profit. So if you don't go to FIRS like, oh, I need tax clearance, probably you want to bid for a contract or something. So if you don't go to them for tax clearance purpose, so you just go when you start the business, just go to FIRS. So except you want to obtain tax clearance or something from revenue and all of that. And also because you will need TIN in a case where you're opening a bank account. So that means your registration with FIRS must have started a little earlier than you starting your business. So in a case where you don't have a bank account, nothing is happening, you don't have an issue largely. FIRS is not after you. That's the point. They are not after you until you need something from them. That's when they now go and check your record. Okay, have you filed 18 months after? Since you have not, the penalties.
Okay, so Yinka Alajide from the UK is asking, is a food processing plant, i.e. one that converts raw agricultural produce into final products, part of the exempted agricultural companies?
Yes, it's not company, it's more of the equipment, so it is.
Okay.
What is agricultural related?
Okay. Okay, so these are all questions relating to what we've clarified. Okay, now Inwasike Chineye is asking, how does someone file for returns?
So how to file your returns?
Yes.
Okay, so the moment you are registered, all right, the moment you are registered, if it's company's income tax returns, you need to get an audit. The reason why I said you need to put together your documentation of every single transaction that has happened in the business on a yearly basis is that you will need to put together like a financial statement that shows the statement of your financial dealings for the business. Okay, so you're expected to call in an auditor. Auditors, essentially they will just put together your record, audit it, and confirm that, okay, this thing aligns and is in place. So you get that audited account. So the moment you get that audited account, you have a tax consultant who will do certain computations for you, which should go with the account. So in a case where your business doesn't have up to 25 million annual turnover, that means there is no tax computation for you. You are not liable. You just have a filing obligation. You just file the account, and submit it. You use your cover letter, a cover letter of the business, stating the address of the tax authority. Usually you register in the tax authority that is closest to the area where your business is, or where the registered address of your business is. Okay, so you just address on your business letterhead, submit the account with tax computation. If you have tax to pay, the evidence of payment of the tax. Usually most of the commercial banks are collecting banks for the tax authority, federal and state. So you just approach any of them, you tell them this is the tax I want to pay. They will guide you on how to make payments. Some of them have online platform, of course, for all those payments. But then, when you're just starting, it's best that you go through a proper bank so that you even lay, the foundation. If you're paying taxes, you lay the foundation properly before you start doing online, so that something will not be missing on the net and you cannot trace, and so there are some of those complications. So the best thing is approach a bank, make a payment. They'll give you an e-ticket. That e-ticket is the evidence that the payment has gone through. Attach the audited account, the tax computation, the evidence of payment, which is the e-ticket, and do a cover letter, okay? And take it to the tax authority where you are registered, which should be the one that is closest to your business address. Federal Inland Revenue Service, you can even go online. If you go on their website, you see all the offices of Federal Inland Revenue Services. So if you go to any of them, because they are actually batched, so for micro and small businesses, there are certain ones that are for micro and small businesses. There are some that are for medium business. There are some that are for large. Okay, so if you go to any of them, they will direct you on where the relevant tax office for your business should be. But essentially within that same environment where your business is registered.
Okay, thank you so much for that, Bumi. Honestly, I don't know why our tax is this complicated. It really shouldn't be, especially for businesses that are not making so much money. As long as there's evidence, I'm not sure I agree with the filing aspect where you still need to file. I mean, you need to incur the cost of getting an auditor. You need to incur the cost of getting a tax consultant, to do this for you. I believe you should use your good position to begin to see how we can begin to influence these things.
And let me just speak to that. The reason is because in Nigeria, we do not have data. So we have a major data problem. Okay, and because a lot of individuals or small businesses are outside the tax net, so government is not aware of what is happening to the Finance Act that was introduced, one of the major, major reasons for government is that to encourage small businesses to thrive. That in those boarding years, you don't have any need to start bothering your mind about taxation and all of that. When the Finance Act first came out, everybody was excited that, okay, thank God, as long as somebody mentioned it, that she had to discontinue because her turnover had not been up to 25 million, and meanwhile, she had been filing previously. And then so when the provision came out, everybody was excited that, thank God, all the small business will be given some time, okay, to grow. Then the Federal Inland Revenue Service that has the obligation to administer these taxes, because we've actually been waiting for some circular or communication to say, okay, in as far as A, B, C, D, E, F that the Finance Act has mentioned are concerned, as far as they are concerned, this is how to go about it. So that was when they now came up with, if you have turnover of 20 million previously, we are not excusing you. So this provision doesn't cover you. So they came up with all, and government is looking for revenue. So everything that mentioned in the Finance Act that you are not supposed to pay, they were looking for ways to still make sure that at the end of the day, something still, and it's such a pity. But that is it. Based on what the Finance Act has even said, what it has said is that for small businesses, even if you are still not within the 25 million threshold, what qualifies you for it is that you now file your returns and we confirm that you actually don't have up to that 25 million. Because basically, because of lack of data, that's the only way government is able to tell that you are not within that net. And also government has gone further to say, FIRS actually has gone further to say that, okay, we know that because of this 25 million threshold, there are certain companies that instead of being one, they will divide themselves into 7. So that none of those entities have up to 25 million turnover in a year. So they're also saying that we are still going to unveil, okay, and track and try to bring together all those kind of entities. And at the end of the day, I don't know, it's like you are being given something with the right hand and we are trying to use the left hand to gradually collect it from people.
All right. So we'll take the final question from Nwasikechine. So she says, Ma, so what's your advice now for businesses that are registered for over 18 months and have not filed returns?
So my advice is that don't start until you commence operations. Before now, it was important that you register for VAT, even if you are yet to commence. Now they've taken that out. So that means you don't need to file VAT returns. So don't bother until you start. But if you need tax clearance from tax authority, they will ask you for these 18-month returns. So my advice is that, because they're actually not after those kind of entities for now. So you can, as long as you're sure that there's no operation, no revenue, no payment, you can just hold on until you commence operations.
Fantastic. Thank you so much, Bomi. It's been, someone says this is a session I'm going to watch like 3 times over.
Oh my God.
And I totally agree. I mean, tax in Africa has been demystified in this session. Yes. Thank you so much, Bomi. It's really been a useful session for us.
Actually, I had a great time. I'm not sure how many hours we spent, but
thank you so much. Thank you so much. And appreciation goes to Pedabo too for releasing you. Yeah. To come and have this session.
I believe that.
Thank you. All right then, ladies. We'll continue the chat offline. I know we've taken more than enough time, so I mean, we'll continue the talk later. Thank you so much, Vumi, and do enjoy the rest of your day.
My pleasure. Thank you, ladies. Enjoy the rest of your day.